volatility, uncertainty, complexity, and ambiguity. I think these are the four words that pretty much encapsulate the times that we've seen in the last 6 to 8 weeks' time, right? But as things calm down a little bit, perhaps it's a great time to analyze and reflect, and then perhaps even look to what the future really holds for us, particularly from an economy perspective as well as from the perspective of financial markets. And for that, I have Avi Satwalekar, President of Franklin Templeton India. Avi, if you look at the last maybe 6 to 8 weeks, right? So we've had conversations on US tariffs. Obviously, you had border tensions. And typically, even though things settle down, the lingering impact remains for a little longer. And therefore, my first question to you is, how do you see the next maybe short to medium term shaping up? Because there's already this context of a tariff discussion with the US as well as the stress on the border.
So, we are longer term players. Yeah. The short term isn't really that much of a focus, but part of the reason I think we've had a lot of this, what I would call noise in the system, right? Because that's, for the most part, that's what it is, till it actually becomes actionable information. From a tariff perspective, I do feel that there will be some resolution that comes to it sooner rather than later, because nobody can really afford. The main two, players in the tariff war is China and the US, and neither one of them can really afford a long drawn out extended tariff situation. So I think there will be, and I think we've seen in the last week or so, we've seen some really good healthy signs towards that, at least a reasonable moderation in the levels, etc. If you look at from an India perspective, right, I think the next 3 to 6 months has the potential to be a little choppy. Okay. Because while we may get some tariff clarity, you're still going to need to see how that plays through.
Right.
There are always unintended consequences to any of these big shifts, right? And we're making a big shift when we talk about tariffs, right? This is changing the way global trade has occurred for the last 30, 40 years. Yeah. So there are going to be unintended consequences to that, and that will kind of play out. We are in the process of locking in our own agreements. India has just recently closed their FTA with the UK, which looks very healthy. 99% of our exports to the UK will have no tariffs, right? So those kind of transactions will come through. Now, how they play out will be critical. And as that comes through, none of that will play out very quickly. And that will create a little bit of uncertainty, and with uncertainty comes volatility. So for the next, I would say 3 to 6 months, it is going to be a little choppy, and that's, I think, the perfect time to be thinking about keeping that long-term focus, because that hasn't changed.
Yeah. And you want to touch a little bit about the stress that we've seen on the border.
So it's unfortunate. And I find that, because we're in the financial business, we're all looking at what happens on an economic front, what happens on a financial front. But we shouldn't lose track of what happens at a human level, right? And the actual impact that it has on the people in the state itself. Kashmir, coincidentally, I just visited and got back from a visit from Kashmir. And as a state, it is starting to show some decent recovery.
Yeah.
Tourism has come back. Businesses are starting to invest in. And so this is definitely a little bit of a spanner in the works, right? Now, from what does this mean for us longer term? Unless we have a long drawn out episode, this doesn't mean anything from an economic standpoint.
Right.
And this is not the first time we've had such a flare up with Pakistan. Going back to 99 with the Kargil war, the parliament attacks in 2001, then you had Uri, you had Balankot in 2017. And in none of those scenarios did you see a negative return 12 months out, except for 2001. And that was a consequence of what was going on globally with the tech meltdown.
Correct. Now, that's a great segue into my next question. I read somewhere that, every crisis comes with a certain opportunity, right? What is that opportunity that you see, with what the world and what India has actually witnessed over the last 6 to 8 weeks?
Right from the start of the whole tariff discussions, right? It's become very apparent that India would be a net beneficiary. So I do think that from an opportunity perspective, it becomes very clear that India has, from an economic standpoint, not just the domestic story, but also as a manufacturing and an export hub. Now that has always been an opportunity for us. What is more stark now is the absolute focus that most companies will have now on shifting away manufacturing bases. It's not a given. We have to, from a policy perspective, from an ease of doing perspective, ease of doing business perspective, we will have to do stuff. It is not, because there are enough competitors around for that.
Sure.
But I do think that we have, for us, it is an opportunity. 47% of our exports are services, which are not tariffed.
Yeah.
So the impact on India per se is going to be muted.
Got it. Okay. Now, I think, when you look at retail investor reactions, right? I mean, retail investors do get impacted by the noise. And what would your advice be to them, to how do they actually maintain that calm?
I think the only way to do that is to basically, keep an eye on the long-term goal.
Yeah.
Right? Which is very difficult. It is not an easy task. We live and breathe it day to day, and we know how challenging that can be.
Right.
So if you're not doing this day to day, that is even more challenging, because you're getting snippets, and the only snippets you will catch are generally the extremes. Right. So the focus should be on, what are you planning for? What is your goal? What is your eventual target? And if none of those have shifted, the short-term noise is not something that you should try and kind of work around. Just take this recent episode with the tariffs, and since September last 2024 till, let's say, the first week of April, right? The Nifty 50 was off about 15-16%, right? And then from April 7th through till the end of April, the Nifty is up 13%. So if in those 6 months you had been looking at the noise and the slowing earnings growth and the economy potentially slowing down, you would have probably liquidated, stopped SIPs or whatever it is. And then you lost out on your opportunity to recover.
Particularly if you're an SIP investor, you've lost out big time.
Yeah, absolutely.
If you stopped your SIP, you've lost out big time.
Absolutely. So I just feel that one of the things we say is kind of be non-stop with our SIPs, and that's it couldn't be truer for a time like this.
Yeah. So, Avi, there are also investors perhaps who've been investing for a long period of time and recognize some of these opportunities very well, right? Would your advice to them be to double down on this opportunity and be bold, or be a little conservative?
So once again, when you think about that question, right? Any answer to that would suggest that I should be trying to time it. If I'm trying to take advantage of it, or if I'm flip it to the other side in terms of the greed element, right? I'm not a big believer in trying to time the markets, for the simple reason that you may get it right once or twice, but to get it consistently right
is difficult.
Is exceedingly difficult, right? And highly unlikely also. The probabilities are stacked against you. So I would say that it doesn't change, right? I don't think you want to try and, the way you want to think about this is, for one, you keep your SIPs going, right? Through ups and downs, because it is, quite honestly, the simplest method to take advantage of volatility. And that's effectively what you need to be doing right now. But if you feel like you want to take advantage of a particular move, then the way to think about that is you decide how much discretionary investment you would like to make.
Got it. Yeah.
And then have a very clear mechanical threshold that says, okay, if the market drops to this level, I'm going to put in an extra
Extra
X.
money. Yeah.
Right?
Yeah.
And
So
that's the
do
way
that
to do it.
also with a certain sense of discipline.
Absolutely.
Rather than being ad hocish.
And it's not just discipline. More than discipline, it is the idea is to take emotion out of the equation.
Yeah.
Right?
Yeah.
And that is the biggest challenge investors have. And both retail as well as professional. I mean,
investing is an emotional decision.
Absolutely.
Unfortunately, yeah.
It is an emotional decision, but the problem is that if you make emotion-based decisions in investments, they're typically going to end up incorrect.
Absolutely. With that, ladies and gentlemen, thank you so much for joining us for this conversation, and hopefully we'll have a lot of more interesting topics to come forward in the next couple of months' time. Thank you so much once again.
Thanks.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.